And we are live. Excuse me. What's going on, guys? It's Ricky with TechBud Solutions. Hope that you guys are all having an amazing Friday. Today's August 22nd. It's 6:25 in the morning, 5 minutes before the market opens here in Arizona. And we are live. So very excited to see what ends up happening today. So 30 minutes after the market opens is the Jackson Hole meeting, which I will be live streaming for free on this stream, right? So just another reason to subscribe if you guys haven't done so already. I have you guys here. We actually have our LPP team mainly that's joining us as well for our live trading sessions. So normally every single morning, right at market open, we start our mornings like this, normally right at market open for about 1 hour. And they get to watch me trade live. So if you like what you see for the first 30 minutes, and then we're going to have to live stream or really focus on the Jackson Hole meeting. If you like what you see, I want to remind you, I do trade live with our LPP team every morning. Whenever it is that you feel like you are ready, we do have a discount link for you. It's the biggest discount we offer, and it's the first link in the description down below. If you don't see it, you can feel free to refresh it. So let's go ahead and jump right into it. So what's up? What's up? Good morning. Good morning. How we doing? Hello from Poland. What's going on, Claudia? Thank you for tuning on in. What's going on, Justin? We got NASDAQ market slightly in the green, right? A nice gap up. We had some selling pressure during the overnight hours. So the thing that I like to pay attention to is there a clear direction during the pre-market session, but also asking the question, is it going to hold, right? It kind of looks like we have a strong resistance right around 565 during this pre-market range. We'll see if when the market opens, if we're able to blow above it and continue to show progress on the upside, because that would mean, hey, maybe we want to go long. Or if it shows signs of continuous resistance as it's done this entire pre-market session, we have previous lows of 560, there's some gap down potential, right? In that case, maybe we want to go short. Please do not short if you're a complete beginner and you've never traded before. Shorting does come at a greater form of risk. It's not designed for beginners, so please don't try to do it. So can you check spot? It's going to be relatively very similar to QQQ. So nothing different to check there right now. Good morning. No cut. Powell has no reason to. I agree with that. I don't want to say I 100% agree. I do agree that the inflation rate is much more of a concern than the labor market. And they've also made that very clear during the Fed minutes. But that was also before one of the most recent job reports. So we'll see. I talked about it yesterday. If you guys watched my second video of the day, I really don't think that he's going to say too much. Like if you've listened to Jerome Powell and all his live events, he doesn't comment. Like there's always this big expectation of him to like provide clarity. And he was like, we'll wait for, things are looking fine. We'll wait for the next series of reports and make our decision then. That's like always what he says, right? So we'll see. We'll follow the data. Yes. And people hate it. Some people hate it. I don't, right? I think they're trying to be calculated and intentional with, what it is that what the trades are choosing to take. I don't think there's anything wrong with that. The trend is down, Ricky, slightly. Not really for NASDAQ. NASDAQ, I mean, it's not incredibly bullish, but it's slightly in the green. And we're kind of trading sideways here. So remember, markets are desperate to recover. They've always wanted to recover. And that's why I'm giving so much potential for the market to recover. I don't want to make an impulsive decision and then later end up regretting it. So we're going to wait for direction to be clear. Once and if we get a clear opportunity, I'll initiate some trades and you guys can see it happen within this session. 30 minutes, right? We're about 30 seconds away from the market opening. 30 minutes after the market opens, that's when the Jackson Hole meeting begins. That's the live stream. To my understanding, it's only Jerome Powell's speech that is going to get broadcasted. Everything else is pretty much private. So we'll see. We'll see how it takes place, but I'll have it all covered for you guys. So sit back, relax. I hope that it earned your thumbs up. Don't forget to subscribe. And if you have any questions, feel free to let us know in that live chat. Okay, here we go. Market opens in 3, 2, 1. Boom. Here it goes. NASDAQ market curling over. NASDAQ market getting rejected. Big drop there. Big drop. Okay. So we are seeing some selling pressure. We are seeing markets de-risk. Let's see if the selling pressure continues, right? There's no reason that we need to short if it's just one candle and then we see a sharp recovery. Remember, oh no, we're seeing some aggressive selling pressure right now. Not like yesterday. Yesterday, it was like for every red candle, we had one huge green candle. That does not look like the case right now. Oh yeah, the trend is down for sure. Here we go. NASDAQ testing support. This is what I want to see. I want to see how desperate it is to recover. Will it recover just as quick as it dropped? And that would show me that, hey, there is a lot of buying pressure. I want to be careful. Or if there's a lot of weakness and it just continues to drop, then I want to short, right? I like this. One of our members with an LPP just shared a little post about his expectations of the speech today. Do you guys mind if I share it with you? I guess, Mike, do you mind if I share it? Yeah, I think it should be fine. Please share. Sweet. I actually really liked it. I was reading it and I was like, it seemed a little odd, but I think it's good. Ready? All right. It says, Trump is anti-politician. He speaks emotionally, intentionally, provocative, and unscripted. He embraces conflict and rejects political correctness in any form. Whereas Powell is the consummate of a politician, right? Every word he says is politically diplomatic. Diplomatic. While Trump was roasting him publicly, Powell says it was an honor to have the president tour the Fed, which is true. Powell ain't gonna say a clear word about direction or any clear commitment. Patience, cautious is the best case that he softens the expectation of a rate cut. Today's words are not about giving us indication of future cuts. Look for the meh words. Transitory price stability, a ways to go. Labor market weakness is not outweighing inflation pressures. And the Home Depot and Target and other retailers warning this week about price increases only add to that. I feel like this really highlights the concern between both. And again, this is just a member. I'm not going to pretend like what it is that he is saying is also definite, right? Because at the end of the day, it is 100% just his opinion. But if you pay attention to Jerome Powell, you would know. If you actually listen to Jerome Powell, I'm not saying that you pay attention to Trump's tweets about Jerome Powell, two very different perspectives or opinions that you would probably have of JP, right? But if you actually pay attention to him, you know that he doesn't speak out of line. He doesn't speak out of term. He doesn't speak to disrespect. He focuses on his job. They've always been data dependent. He's always been respectful. And regardless if you like him or not, he's been consistent with everything that he's done, either regardless if it's under the Biden or the Trump administration. And he doesn't give too much, where Trump, in my opinion, says way too much and then later regrets it because he has to send out a tweet every day, right? It's the opposite for JP. He's a man of few words, and he allows, again, when he needs to say something, for that's why I believe his words carry so much weight, right? When he does speak, that's why moments like this are so important. I feel like this was the case for Trump, but then now Trump is just a loudmouth. You have to acknowledge it, right? Trump just says whatever it is that's in his best interest, just like he announced that he's going to be hosting a press conference today. It just happens to be right after a moment that could be experiencing a lot of selling pressure if Jerome Powell highlights no rate cuts in September, right? Just something to, I think people are so eager right now to expect Jerome Powell to say something. But if you actually have listened to him speak before, you would know that he often says very little because he knows how much he influences the market. And that pisses some people off, but the people that get pissed off by that just don't understand, nor do they respect the whole point of people's roles, right? In our government. And that's the whole reason that there's this separation of power, which again, it's not that it's exciting. It's just that I think the way that Jerome Powell does it is very respectful. So Powell speaks like a patient grandfather, and Trump speaks like a crazy uncle. I don't want to say everything that Trump says is crazy. I'm just saying that, there's times that he has really good announcements. You have to, right? Just like anything, sure. But I would say that when all he does is just yap about all these trade deals, and then, fast forward, it's now been 4 months, and there's not been really any trade deals that have been signed. It's like it's a joke, right? He does all this talk for nothing. It's the art of the deal, as his followers like to say, right? There's a big difference between Republicans and MAGAs. If you're a Republican, I'm sure that, again, you have specific policies that, you align with, versus MAGA is you're on your knees for Trump. And that part just baffles me. I don't care. I don't get why you would support a president like you would a sports team. He's an individual, and individuals make mistakes, and it's good to acknowledge those mistakes because hopefully it promotes change, right? Very, very simple. All right, NASDAQ market testing. Rookie short HIMS. Let's see. Where is it? It's dropping, but HIMS is, yeah. I don't know if this is going to be the move for me. Looks like it's already testing previous oversold range. We'd have to break below really that $43 support range, which is kind of testing as a support right now. It already looks oversold enough. I don't want to jump into something based off of FOMO, right? Hood, very similar setup. We had a flash crash, now trying to recover. Let's look at Microsoft, MSFT. A lot of consolidation. What do you guys say about markets right now? I don't think directions are super clear. I don't think it's incredibly bullish or incredibly bearish. I think it's still trying to figure out if it's going to gap up or gap down. So this is, again, so if you're asking, why aren't we trading yet? Because direction is not clear, and direction is the most important thing, one of the most important, variables that it's out of your control, but you can work with it, right? Wait for confirmation. I like that. Okay, just want to make sure, especially for some people that we have tuning on in maybe for the first time, that might not understand of like, hey, market's open, why not just trade? Again, it's also very important to be selective, right? NASDAQ market still trying to push. What do you think about INTC? As a sharp recovery today, nice 2.4% after pulling on back. I think INTC is still overbought. Excuse Woo. Excuse me. Sorry, headphone users. Hopefully it wasn't too loud. But what do I think about this? I wouldn't care to buy it up here. INTC is not one of my focuses at all in going long. If it becomes overbought, I would short it. That's all. That's all I have to say about this one. We got UNH, a lot of consolidation above 300 as of right now. So we got PLTR here. Tesla looks overbought. Again, things might look overbought or oversold on the day. I want to remind you, in 20 minutes, they can look very different. Remember, Jerome Powell is going to speak. If there's a time to maybe save your day trades, maybe it's not a terrible idea. There it goes. Tesla beginning to push. Trying to recover. Yep. NASDAQ market looks like markets are trying to push up right now prior to the report. Here we go. Does this mean that the market is not going to sell off that much? I wouldn't say that. The more the market pushes up, if what is said is not what the market expected, then you would expect the market to possibly drop, right? Drop even harder. There it goes. Overbought reversal. And remember, if there's too much volatility and you don't see there to be a clear sense of direction, there's nothing wrong with holding back and you can just stay cash. You don't have to trade today. You can allow markets to settle. They're either going to gap up or gap down. And then you can follow up on Monday. That is also something that during very volatile days, some of our traders that are part of LPP, they just choose to stay back, wait for the gap up or gap down because something significant is going to happen, right? normally during a day like this. So instead of trying to go with the flow of the market or trade when volume is just much higher, they just wait. They wait for things to settle. On Monday, things will be more calm, and then choose to take action then. Why is UNH so volatile today? Is it? Yeah, a little bit more activity. Nice push. Ties of 310. Looks like it has, hit lows of 304. You'd have to look into see if there's any news that was being shared, any updates on its investigation. We have PLTR, early signs of a possible reversal. Going back up to retest previous pre-market highs, 156. INTC, still pushing. Markets look bullish for now, right? Let them run. And remember, they have every reason to because they've been running this entire time, right? So remember, markets are desperate to rally. Remember that. If you are shorting or even thinking about shorting, markets are desperate to rally. Oof. Here we go. Let the volatility begin. We have 14 minutes before Jerome Powell speaks. 14 minutes. Lots of layoffs in tech sector across the globe. Layoffs have been happening. That's been the thing. It's now everyone all of a sudden is paying attention. It's so funny when the tech sector does it, but layoffs have been happening in especially in retail. Like, I don't know how many times we would have to say it. This isn't just right now. This has been for the past 4 or 5 months. And even prior to that, like, Americans are struggling, right? Like, there's no other way to put it. They are. But yet stock markets, or the markets were pushing to new all-time highs. Remember, the stock market is not a representation of how the average Americans are doing. It's a projection of how investors see the future of these publicly traded companies. So again, just because the stock market is thriving doesn't mean that Americans or our economy is thriving. Two very different things. There's a huge gap between the two. Bitcoin is equally rising. Bitcoin can suck it. Did you guys hear the news that, what's his name? Kanye came out with a meme coin. He pumped it. He sold a bunch of his coin and whatever X amount he made, and it dumped like 75 to like 90%. Did you guys hear the news? I think that for those reasons, and because they're able to get away with it, it just shows the uncertainty and the lack of I think it just cheapens crypto over and over again. When Trump did it, when all these other celebrities have pumped and dumped coins, again, they would never do that in the stock market because they would be in jail, right? A very different approach. But nonetheless, again, it's allowed in the crypto space. It's frowned upon, obviously, but it's allowed. And I think that's one of the main reasons that so many people will always just not care for crypto, because of how cheap it will always be made to look, because of how people just take advantage of others by pumping and dumping meme coins. Shitcoins are the penny stock equivalents. You can't pump and dump penny stocks in the stock market without having repercussions. There's a reason that they do it with crypto and not in the stock market, right? All right, here we go. The president's rug was comical. Yeah, it's a good way to cheapen the presidency, right? How long is the meeting? It should be about 30 minutes. I'll start pulling it up. We have 9 minutes left until Jerome Powell takes the stage. You guys ready? NASDAQ market looking quite overbought, but remember, it can push up higher if what he says is what the market is looking for. If it's not, get ready for a nice little drop. Please, and I mean this, please, do not trade if you are watching this for the first time. It's not meant for beginners. It's going to be an extremely volatile time. Just watch the market. There's nothing wrong with just watching. Even you just watching all day today, you're going to see that there's going to be a big gap in the market. This can really set you up for Monday, right? You need to learn how to walk before you run. Again, our focus is to encourage healthy habits. For beginners, please do not be afraid to just watch, okay? Here we go, NASDAQ market beginning to curl on over. All right, we have it pulled up here. Let's see.
A radical pragmatist, a radical centrist. We've got to get the center to rise up.
Okay. We are good to go. We have 7 minutes left before he actually takes the stage and begins to speak. You guys ready? Trump is going live too. Oh, we heard. I posted it yesterday on my Instagram. If you guys didn't see that, Trump has, again, it's impeccable timing. His team knows how to cloud or mute someone else's impact by, trying to, take the stage as well. Ready? So Powell showed consistency by cutting rates 3 times between September and December 2024 election eve. I believe there was a rate cut around that time, but yeah, it was also before tariffs were announced. Tariffs are known to be inflationary. So yeah, he's made it very clear that he did not, or they did not. It's not just Jerome Powell. I think that's what some small-minded people don't understand, is that it's the reason that you guys continue to point the finger at Jerome Powell is because Trump keeps calling out Jerome Powell because he's the head of the Federal Reserve. It's a committee, right? It's a group of people that are part of the Fed that vote. Jerome Powell is just one of those votes, just so you understand, right? So it sounds kind of silly when you're like, oh, it's all Jerome Powell. No, you're saying that because you're trying to mimic your daddy, Trump, when he comments or calls out Powell, right? They've made it very clear. they've been focused on the data, and they've been waiting for the data to see, do tariffs actually cause inflation, because there are aggressive forms of tariffs, right? But with all the pauses, it's kind of hard to understand that. So yeah, liberal Ricky in the chat. No, definitely not. I voted for Trump, right? I have no reason to care for the other side, right? My thing is, when someone does something that I don't agree with, I don't care if I voted for them. It's good as an individual, as a human, to acknowledge it, of like, hey, I don't agree with that, right? I don't agree with the president of the United States publishing a meme coin to enrich himself. I don't agree with the president of the United States creating legislation for crypto that allows crypto to thrive when he created a company in 2024 that directly benefits from that legislation. Again, it's very simple things. Just like we talk about Nancy Pelosi and try to target her, and I've made numerous videos about her, right? It's really good to have like a common sense of, hey, if one person can't do it, then so the president shouldn't be able to either, right? Very, very easy to understand. That's all. There's a lot of things that Trump has done that I do agree with. I'm all for, security. I'm all for defense, all of that, right? But one of the things that we've also had to understand is that the reason that Trump campaigned on tariffs were because he was going to implement tariffs to get rid of our federal income tax. Federal income tax being removed has not even been talked about. So again, he campaigns on one thing and then does something else. I don't agree with that. Very simple. So you can call me a liberal for all you want if that makes you feel better. But again, I'm not the one on my knees for Trump, right? That's you. Very, very different approach. All right, let's go ahead and jump right into it. So we got the live here. Hopefully, again, you guys enjoyed the little live stream. Hopefully we earn your thumbs up. Don't forget to subscribe. And if you have any questions, just feel free to partake in that live chat, and would love to answer any questions that you guys might have. Okay? All right.
And so, yeah, I'm cheering for the team that's making the selection, that they make the right choice.
Patrick Harker, thank you so much for being here. Really appreciate it, and I guess go Eagles. Patrick Harker, former Philadelphia Fed president. We are awaiting that speech from Chair Powell, who is going to be speaking here in Jackson Hole in less than 3 minutes' time. Mike, we have been hearing from a number of people the fear of a 70s type of stagflation light. Not exactly 70s, but that seems to be the emphasis so far in the Fed speak we've heard so far.
Well, it's the data that we're seeing. We're seeing a slowdown.
So again, we have 2 more minutes until Jerome Powell begins to speak. For all those that are tuning on in, if it's not too much to ask, all I literally ask you to do is drop a thumbs up, and don't forget to subscribe. If you have any questions, again, you do have to be subscribed to the channel. Just share it in the live chat, and I'll be going back and forth, sharing the screen and also sharing how the market is reacting. Please, for all of you beginners that are watching, do not make an impulsive decision and later end up regretting it. During a very volatile day like this, it's not the most ideal day to be trading as a beginner. I'm just making you aware. You're an adult. You can do whatever it is that you want. I'm just trying to look out for beginners. Do not take impulsive trades that you might not be ready for. I wish nothing but the best for you. Again, feel free to comment if you have any questions.
You define it, because what the Fed is going to do is take out the idea that we're going to make policy based on what we think is going to happen. And they're going to say, we're going to look at all the data that comes in. So it could be ex post, or it could be just consensus.
Do the dots stay?
Look, the dots it's all the communication tool. And how do you communicate? Maybe get on Twitter. I will say that we are waiting for Jerome Powell to come out and give his speech. We're less than a minute away. Unclear exactly how he prepped for it. How do you think he prepped?
He had breakfast at the Pioneer Grill.
You saw him?
I said good morning to the chairman this morning, and I did not see if it was, I didn't see if he went healthy or full English.
Well, yeah,
But-
I can guarantee he didn't
I
go
said good
full
morning to the
English ahead of
chairman.
this, but this is going to be a monumental moment for him. His last speech speech at Jackson Hole as Fed chair with the whole world watching. Does he address independence? Does he deal with...
Getting your dream kitchen is easier than you think. Superior Stone and Cabinet has stunning, high-quality cabinets.
And frankly, the international feel here, really notable, as you mentioned.
To me, that's a major theme for me, is the international community is screaming.
Yeah. Micah has some headlines.
The headlines are out. The chairman has started speaking, and here is the key phrase. The shifting balance of risks may warrant adjusting policy. That's going to get Wall Street's attention because it's opening the door to a rate cut. Here's the key sentence. With policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. The Fed is also announcing its new framework, which is pretty much as we were just talking about with Pat Harker, dropping the reference to the effective lower bound, eliminating the inflation makeup strategy, committing to contain inflation expectations and concern about labor market shortfalls. But the key here is that there are downside risks to employment. The Fed chairman says the inflation outlook is that it will rise, but perhaps at a slower pace. So right now we are looking at a Fed that has the door open for a September 17th cut. And I guess, Lisa, we're probably going to see the long end and the short end reacting here.
Well, let's pull that up right now. You do see an absolute catering in yields on the heels of this opening up to the potential for rate cuts coming out. The downside risks.
I thought we were going to be able to hear the dude speak.
Also rising. The S&P 500 now up 1.3%. Yields down 8 basis points on the long end for the 10-year, even more for the 2-year.
And looking at the inflation-adjusted yield, the 10-year real yield comes in 6 basis points. That is substantial. It's still within the range, but at 1.86%, it's a real reversal towards a presumption of Fed accommodation.
Yeah, and this comes at a time where there is this question of how they are going to message this, given that inflation has remained above that 2% target since 2021. Mike, do we hear anything about why this is a Fed willing to look through that kind of inflation?
They do anticipate that tariffs are going to add to inflation, and they think it will take place over time, but they're still looking, at least as Chairman Powell puts it, they're still looking at these as one-time price adjustments within each sector. So it's likely that inflation is going to go up, but then they think it stabilizes and might go down again.
Well, right now, let's take a listen to Jay Powell, Chair of the Federal Reserve.
In my remarks today, I will first address the current economic situation and the near-term outlook for monetary policy. I will then turn to the results of our second public review of our monetary policy framework as captured in the revised Statement on Longer-Run Goals and Monetary Policy Strategy that we released today. When I appeared at this podium 1 year ago, the economy was at an inflection point. Our policy rate had stood at 5.25% to 5.5% for more than a year. That restrictive policy stance was appropriate to help bring down inflation and to foster a sustainable balance between aggregate demand and supply. Inflation had moved much closer to our objective, and the labor market had cooled from its formerly overheated state. Upside risks to inflation had diminished, but the unemployment rate had increased by almost a full percentage point, a development that historically has not occurred outside of recessions. Over the subsequent 3 Federal Open Market Committee meetings, we recalibrated our policy stance, setting the stage for the labor market to remain in balance near maximum employment over the past year. This year, the economy has faced new challenges. Significantly higher tariffs across our trading partners are remaking the global trading system. Tighter immigration policy has led to an abrupt slowdown in labor force growth. Over the longer run, changes in tax, spending, and regulatory policies may also have important implications for economic growth and productivity. There is significant uncertainty about where all of these policies will eventually settle and what their lasting effects on the economy will be. Changes in trade and immigration policies are affecting both demand and supply. In this environment, distinguishing cyclical developments from trend or structural developments is difficult. This distinction is critical because monetary policy can work to stabilize cyclical fluctuations, but can do little to alter structural changes. The labor market is a case in point. The July employment report, released earlier this month, showed that payroll job growth slowed to an average pace of only 35,000 per month over the past 3 months, down from 168,000 per month during 2024. This slowdown is much larger than assessed just a month ago, as the earlier figures for May and June were revised down substantially. But it does not appear that the slowdown in job growth has opened up a large margin of slack in the labor market, an outcome we want to avoid. The unemployment rate, while edging up in July, stands at a historically low level of 4.2% and has been broadly stable over the past year. Other indicators of labor market conditions are also little changed or have softened only modestly, including quits, layoffs, the ratio of vacancies to unemployment, and nominal wage growth. Labor supply has softened in line with demand, sharply lowering the break-even rate of job creation needed to hold the unemployment rate constant. Indeed, labor force growth has slowed considerably this year with the sharp fall-off in immigration, and the labor force participation rate has edged down in recent months. Overall, while the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers.
You do not want to short
This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. At the same time, GDP growth has slowed notably in the first half of this year to a pace of 1.2%, roughly half the 2.5% pace in 2024. The decline in growth has largely reflected a slowdown in consumer spending. As with the labor market, some of the slowing in GDP likely reflects slower growth of supply or potential output. Turning to inflation, higher tariffs have begun to push up prices in some categories of goods. Estimates based on the latest available data indicate that total PCE prices rose 2.6% over the 12 months ending in July. Excluding the volatile food and energy categories, core PCE prices rose 2.9%, above their level of a year ago. Within core, prices of goods increased 1.1% over the past 12 months.
Hey, heads up. NASDAQ market is showing signs of a possible reversal here. Overbought reversal setting up. Not that you need to short it. Again, please do not short it if you're a beginner. It's just showing signs of a slowdown. I actually thought it would have popped a little harder than this and would have kept going. I don't know why it's struggling so much right now.
The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains and distribution networks. Moreover, tariff rates continue to evolve, potentially prolonging the adjustment process. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed. One possibility is that workers who see their real incomes decline because of higher prices demand and get higher wages from employers, setting off adverse wage price dynamics. Given that the labor market is not particularly tight and faces increasing downside risks, that outcome does not seem likely. Another possibility is that inflation expectations could move up, dragging actual inflation with them. Inflation has been above our target for more than 4 years and remains a prominent concern for households and businesses. Measures of longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored and consistent with our longer-run inflation objective of 2%. Of course, we cannot take the stability of inflation expectations for granted. Come what may, we will not allow a one-time increase in the price level to become an ongoing inflation problem. So, putting the pieces together, what are the implications for monetary policy? In the near term, risks to inflation are tilted to the upside, and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach. So, turning then to my second topic. Our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people. We remain fully committed to fulfilling our statutory mandate, and the revisions to our framework will support that mission across a broad range of economic conditions. Our revised statement on longer-run goals and monetary policy strategy, which...
Be careful, NASDAQ market again is just slowing down just a little bit. This does not mean to short. Do not short, especially if you're a beginner. Markets are bullish. Markets were waiting to hear that the Federal Reserve is going to cut rates. They got what they wanted. Please do not make an impulsive decision that you later end up regretting. Please.
This review are a natural progression grounded in our ever-evolving understanding of our economy. We continue to build upon the initial consensus statement adopted in 2012 under Chairman Ben Bernanke's leadership. Today's revised statement is the outcome of the second public review of our framework, which we conduct at 5-year intervals. This year's review included 3 elements: Fed Listens events at reserve banks around the country, a flagship research conference, and policymaker discussions and deliberations supported by staff analysis at a series of FOMC meetings. In approaching this year's review, a key objective has been to make sure that our framework is suitable across a broad range of economic conditions. At the same time, the framework needs to evolve with changes in the structure of the economy and our understanding of those changes. The Great Depression presented different challenges from those of the Great Inflation and the Great Moderation, which in turn are different from the ones we face today. At the time of the last review, we were living in a new normal, characterized by the proximity of interest rates to the effective lower bound, or ELB, along with low growth, low inflation, and a very flat Phillips curve, meaning that inflation was not very responsive to slack in the economy. To me, a statistic that captures that era is that our policy rate was stuck at the ELB for 7 long years following the onset of the global financial crisis in late 2008. Many here will recall the sluggish growth and painfully slow recovery of that era. It appeared highly likely that if the economy experienced even a mild downturn, our policy rate would be back at the ELB very quickly, probably for another extended period. Inflation and inflation expectations could then decline in a weak economy, raising real interest rates as nominal rates were pinned near zero. Higher real rates would further weigh on job growth and reinforce the downward pressure on inflation and inflation expectations, triggering an adverse dynamic. The economic conditions that brought the policy rate to the ELB and drove the 2020 framework changes were thought to be rooted in slow-moving global factors that would persist for an extended period. And they might well have done so, if not for the pandemic. The 2020 consensus statement included several features that addressed the ELB-related risks that had become increasingly prominent over the preceding 2 decades. We emphasized the importance of anchored inflation, longer-term inflation expectations to support both our price stability and maximum employment goals. Drawing on an extensive literature on strategies to mitigate risks associated with the ELB, we adopted flexible average inflation targeting, a make-up strategy to ensure that inflation expectations would remain well anchored, even with the ELB constraint. In particular, we said that following periods when inflation had been running persistently above 2%, appropriate monetary policy would likely aim to achieve inflation moderately above 2% for some time. In the event, rather than low inflation in the ELB, The post-pandemic reopening brought the highest inflation in 40 years to economies around the world. Like most other central banks and private sector analysts, through year-end 2021, we thought that inflation would subside fairly quickly without a sharp tightening in our policy stance, as this slide will show. When it became clear this was not the case, we responded forcefully, raising our policy rate by 5.25 percentage points over 16 months. That action, combined with the unwinding of pandemic supply disruptions, contributed to inflation moving much closer to our target without the painful rise in unemployment that has accompanied previous efforts to counter high inflation. This year's review considered how economic conditions have evolved over the past 5 years. During this period, we saw that the inflation situation can change rapidly in the face of large shocks. In addition, interest rates are now substantially higher than was the case during the era between the global financial crisis and the pandemic. With inflation above target, our policy rate is restrictive, modestly so in my view. We cannot say for certain where rates will settle out over the longer run, but their neutral rate may now be higher than during the 2010s, reflecting changes in productivity, demographics, fiscal policy, and other factors that affect the balance between saving and investment. During the review, we discussed how the 2020 statement's focus on the ELB may have complicated communications about our response to high inflation. We concluded that the emphasis on an overly specific set of economic conditions may have led to some confusion, and as a result, we made several important changes to the consensus statement to reflect that insight. First, we removed language indicating that the ELB was a defining feature of the economic landscape. Instead, we noted that our monetary policy strategy is designed to promote maximum employment and stable prices across a broad range of economic conditions. The difficulty of operating near the ELB remains a potential concern, but it is not our primary focus. The revised statement reiterates that the committee is prepared to use its full range of tools to achieve its maximum employment and price stability goals, particularly if the federal funds rate is constrained by the ELB. Second, we returned to a framework of flexible inflation targeting and eliminated the makeup strategy. As it turned out, the idea of an intentional moderate inflation overshoot had proved irrelevant. There was nothing intentional or moderate about the inflation that arrived a few months after we announced our 2020 changes to the consensus statement, as I acknowledged publicly in 2021. Well-anchored inflation expectations were critical to our success in bringing down inflation without a sharp increase in unemployment.
Still holding.
Anchored expectations promote the return of inflation to target when adverse.
Just a slight little rejection. Market's still bullish. Please do not short it. Again, if you're a beginner, do not jump into something that you later end up regretting. If you're experienced and you want to take the risk, that's up to you. Again, there's a reason we stayed cash before the report. Let this thing have its move. Markets have been anticipating this. Do not ruin it for yourself by jumping in early.
On my first 5K, my run club suggested I take out Roadrunner.
Economy and supports the well-being of all Americans. This theme came through loud and clear at our Fed Listens events. The past 5 years have been a painful reminder of the hardship that high inflation imposes, especially on those least able to meet the higher costs of necessities. Third, our 2020 statement said that we would mitigate shortfalls rather than deviations from maximum employment. The use of shortfalls reflected the insight that our real-time assessments of the natural rate of unemployment, and hence of maximum employment, are highly uncertain. The later years of the post-global financial crisis recovery featured employment running for an extended period above mainstream estimates of its sustainable level, along with inflation running persistently below our 2% target.
No way it's going to drop.
In the absence of inflationary pressures, it might not be necessary to tighten policy based solely on uncertain real-time estimates of the natural rate of unemployment. We still have that view, but our use of the term shortfalls was not always interpreted as intended, raising communications challenges. In particular, the use of shortfalls was not intended as a commitment to permanently forswear preemption or to ignore labor market tightness. Accordingly, we removed shortfalls from our statement. Instead, the revised document now states more precisely.
Imagine waiting this entire week for this report to come out. Markets push up. Markets have to be bullish, right? What Jerome Powell is saying is actually open to rate cuts. That's what the market's been waiting for, right? You would imagine that the market would respect that it would continue to rally. How is it looking so weak? I if anything, I thought maybe towards the end of the day it could possibly sell off. Not 20 minutes after. This is wild.
Promoting a strong labor market underscores the principle that durably achieving maximum employment fosters broad-based economic opportunities and benefits for all Americans. The feedback we received at Fed Listens events reinforced the value of a strong labor market for American households, employers, and communities. Fourth, consistent with the removal of shortfalls, we made changes to clarify our approach in periods where our employment and inflation objectives are not complementary. In those circumstances, we will follow a balanced approach in promoting them.
Oh, no.
The revised statement now more closely aligns with the original 2012 language. We take into account the extent of departures from our goals and the potentially different time horizons over which each is projected to return to a level consistent with our dual mandate. These principles guide our policy decisions today, as they did in the 2022 to 24 period, when the departure from our 2% inflation target was the overriding concern. In addition to these changes, there is a great deal of continuity with past statements. The document continues to explain how we interpret the mandate Congress has given us and describes the policy framework that we believe will best promote maximum employment and price stability. We continue to believe that monetary policy must be forward-looking and consider the lags in its effects on the economy. For this reason, our policy actions depend on the economic outlook and the balance of risks to that outlook. We continue to believe that setting a numerical goal for employment is unwise because the maximum level of employment is not directly measurable and changes over time for reasons unrelated to monetary policy. We also continue to view a longer-run inflation rate of 2% as most consistent with our dual mandate goals. We believe that our commitment to this target is a key factor, helping keep longer-term inflation expectations well anchored. Experience has shown that 2% inflation is low enough to ensure that inflation is not a concern in household and business decision-making, while also providing a central bank with some policy flexibility to provide accommodation during economic downturns. Finally, the revised consensus statement retained our commitment to conduct a public review roughly every 5 years. There's nothing magic about the 5-year pace. That frequency allows policymakers to reassess structural features of the economy and to engage with the public, practitioners, and academics on the performance of our framework. It is also consistent with several global peers. To wrap up, I want to thank President Schmid and all of his great Kansas City.
No freaking way. You would think, and again, it's not that markets are going red. They're far from red, right? You would think that after this entire week, the market's getting wrecked for the past 4 days, that it would hold a little better, right? Now it's coming back down to retest. Imagine this. Imagine if we do give it all back. Oh, man. First off, I'm very glad that we talked about staying cash prior to the report. It looks like Jerome Powell's finishing up. He's all done there.
Remarks, what a Jackson Hole.
And there it goes. Thank you again for everyone that tuned on in. We got the reaction, and we did get more clarity. That's the whole reason of this event, is to be given more clarity if the Federal Reserve was open to rate cuts. And based off of what it is that he talked about today, they still said that they're data dependent, but definitely that they are open to, I wrote it down here. Man, I can't even read my writing. So may warrant a policy change. The idea of, because of the labor market slowing down so much, it definitely brought some concern. So it is cool to see that the Federal Reserve is now looking at the data and that they're acknowledging that, hey, it might be time to cut rates. But they are still going, you guys have to remember, we still have a whole nother CPI and PPI report. So it's going to be very important to pay attention to those specific things. So please, for all those that did take a trade, I hope that you do your part in taking profits. It doesn't matter if you go long or you go short. There's money to be made on both sides. So yeah, I think that we all kind of got the reaction that we at least wanted. It kind of sucks. Do you guys remember the days that, a CPI report would come out and markets would kind of just still trade flat? At least we got a reaction. This is a nice gap up. We'll see if it continues in that direction. And that's really what I'm looking forward to as of right now. Remember, when market volatility is incredibly high, you need to do your part as a trader to stay patient and stay calculated. You'll see a few people in the live chat that are either encouraging you to buy or encouraging you to sell. Please do not listen to them. Listen to yourself and what you think is best. Don't make an impulsive decision that you later end up regretting. If you don't know what to do, then just stay cash. It's that simple. Please, please, please do not make an impulsive decision that you later end up regretting. You shouldn't be selling if you don't want to. You shouldn't be buying if you don't want to. And definitely do not be shorting if you're a beginner and direction is still fully not in our favor, right? You guys can see that this thing gapped up. It's still holding above the previous support range. There is no break-of pattern, and it's still incredibly green. This thing can continue to hold and rally for the rest of the day. You need to be aware of that, right? Please, please, please. We just want to make sure that you do your part in taking trades that are actually in your best interest. So if you guys have any last-minute questions, would love to answer any questions that you guys might have, and then we will call it a stream. Also, for those that are tuning on in for the first time, if you guys ever want to watch me trade live every single morning, the first link in the description down below will get you the biggest discount for LPP 3.0. And make sure you check out the LPP 3.0 ebook that is also now available only for those that are part of LPP 3.0. So feel free to check that out. So someone asked the question in the live stream. They're like, hey, when does he announce a rate cut? That's not until next month. I think it's like September 17th. If I'm not mistaken, let me go ahead and pull it up very quickly. If I'm not mistaken, this should be updated. The next FOMC rate decision is September 17th. This should be updating. I think that this is going to now start to creep up higher because what Jerome Powell said today does support a rate cut. So that is good news. My only concern right now is the markets are not continuing to rally. They're kind of showing signs of weakness, which normally doesn't happen in this irrational market, right? Markets just push up, keep pushing, keep pushing. We're not getting that same momentum. It kind of looks like things are slowing down. So why didn't you go long? I didn't know that markets were going to gap up. If I could predict the future, of course, I would have gone up. Could I have jumped in after the rally happened? Yes, but I didn't care to, right? I'm not a perfect trader. Every trade that I take is not going to be perfect. I might have missed out on this one, but again, I wanted to see that direction was more clear. I want volume to kind of simmer down. And if we still see a clear sense of direction of the market pushing up, I can then choose to go long. I have the position size to back it up, right? But if it begins to show signs of it slowing down and now it's overbought and it begins to curl on over, I might want to short the market if I get confirmation. Again, you don't have to predict to try to predict to be able to make money in this market. All you have to do is prepare. Yeah, I didn't catch the move up, but it was a 50-50 coin flip. I just didn't think it was worth the risk, so I decided to not take it. That's just my 2 cents. Remember that Trump talks at noon. Great reminder, Cameron. So long now is going broke. I wouldn't say that, right? Market direction is bullish. Let them have their day. They've been getting wrecked all week. And you have to remember, right? You guys know that I have every reason to want the markets to drop, right? I don't have an open short position, but you guys know that I've been wanting the markets to drop. Markets are more bullish than they are bearish. At least they have been for the past 4 months. We need to respect that. Please do not be greedy in the same way that the other side tends to be. Be rational. Be calculated. And please acknowledge that when either the trend is in your favor or it's not. So right now, it's bullish. Let them have it. Because regardless if you let them have it or not, they'll take it, right? Let the markets rally as much as they need to. Your entries don't need to be perfect, and you know they never are. Just be calculated, right? You know that a reversal can eventually happen. It doesn't have to happen today. Don't waste your Friday, bag hold the position over the weekend for possibly another rally on Monday. That's all a possibility. You've been through this. You know this. So Don't convince yourself that you need to trade it or short it. Wait for your criteria to actually be met, okay? Let's see. UNH analysis, Ricky. I don't really have an analysis behind it. We've talked about it before. It's finding a support right around $300 per share for UNH. I would say that was its middle ground before. It's its middle ground now. I think it's just waiting for updates. Hey, is the investigation getting worse or getting better? And it will kind of determine based off of, its progress up or down on that. So thanks for your advice. Of course. Again, all we're trying to do is just to teach beginners to be mindful of risk. I don't care if you go long. I don't care if you go short. We all know that there's money to be made on both sides. The thing is that you don't just make trade decisions because everyone else is doing it. That you make trade decisions because they actually make sense to you and you understand the risk that comes with it. Because every trade comes at some form of risk, okay? Any Bitcoin predictions? No, Bitcoin is not my thing. Thank you for also being a psychologist. No PLTR long now doesn't make sense to me. To a lot of people, it's just, again, to some people that really believe in the company and believe in the hype, let them, if they want to buy at $160, $180 per share, let them buy, right? Like, you shouldn't have to convince anyone not to do something, just like they shouldn't have to feel like they should convince you to buy, right? PLTR, incredibly overbought, incredibly overvalued, but current market conditions support this. Remember, meme coins are thriving right now. They have less of a reason to be thriving. So yes, PLTR, especially if interest rates do begin to get cut, that could even cause those irrational stocks to push up even higher. We have to understand that. 1K likes so far. I appreciate that. Thank you guys for tuning on in, and hopefully I earned your thumbs up. If the way that I broke things down made it, that's all I hope, right? That the way that I broke things down just made it a little bit easier to understand. What was the takeaways? Let's just wrap it up. What was the takeaway from the Jackson Hole meeting today? That the Federal Reserve is open to a change in their policy state. And that's what we got from Jerome Powell today. So he made it very clear that yes, the labor market is a concern, and that although inflation is rising, it's only rising in specific sectors, and therefore they'd be open to the idea of a policy stance change. So that does possibly support a rate cut in September. We still have another CPI, we still have another PPI report before they make that rate decision, but it does look bullish for the market and for a rate decision. That was my takeaway and my interpretation, and it looks like the market's interpretation of what Jerome Powell said. Okay? Everything they do are lies. I don't get why people speak that way. Like, what's the point of having this I just feel like it's a victim mentality and a conspiracy approach. I just don't get it. It's just, I feel like wasted energy and wasted time. If you think that everything is a lie, then why are you here? Right? Why did you spend an hour with me watching this thing live? It's just a waste of time. Come on, right? You're too old for this. Just get over yourself. It's the world's not against you. Just focus on making your little piece of pie, get in, make that money, and bounce. It's that simple, right? Because we are old and wise. Well, in that case, wouldn't Jerome Powell and all those old people be old and wise too? Right? All right. You make it a lot easier and simpler to understand. I appreciate that. That's the whole reason of these live streams and the whole reason of my videos. I don't believe I talk about anything super crazy, and there's nothing fancy about my videos. So I like being straight up with you guys. I like to take news that's being shared, and I like to break it down in bite-sized forms that are easier to digest. So I hope that from the videos that you get from me, when I talk about the good and the bad of the market, I at least make it easy enough to understand for you to get offended if you understand it enough that it offends you. But at the end of the day, if that's the case, again, the whole reason I make these videos are simply for you to understand the concepts that are being talked about, right? So no, they are career liars and you are enslaved. All right, I'm enslaved. I'll be enslaved in my Lamborghini, I guess, right? Urus. Again, all I can ever encourage you to do is to not be like that, right? You don't want to be acting like a victim all the time, like the world against you. Stock market is challenging. It's super challenging because it can be so simple, especially when investing long-term, but it could also get so complicated in moments of distress. So I hope that you just do your part in surrounding yourself with people that encourage you to be the best version of yourself and that make it easier to understand, because that's all that we can really be here for, right? Is that no one has it all figured out. No one knows exactly what's going to happen. And I'm never going to pretend like I do. I make mistakes all the time. And that's the whole reason that so many people that are part of my LPP team enjoy our live trading sessions, is that they get to see the good and the bad when it comes down to the trades. There's weeks that I absolutely kill it. And there's other weeks where I'm just, terrible. But that's the part of trading, right? That's a huge part of trading, of you being able to see it happen live every single day. So again, if that is something that you want to experience daily, I do trade live every single morning. You don't have to sign up if you don't feel ready, but it is designed for complete beginners. It's a one-time payment, lifetime access, and it is on sale right now for LPP 3.0, which does include the LPP live trading sessions. Again, if you want to learn more about it, first link in the description down below. If it's not for you, no hard feelings. Just feel free to subscribe to the channel, and I'd love to do my part in keeping you guys up to date. I hope that earned a thumbs up. Don't forget to follow me on Instagram if you guys haven't done so already. Literally everything is linked in the description of this video. And like always, let's make sure that we end the year on a green note. Take care, team. Yeah, free Rick.